Welcome to the second episode of the Evolution Cloud Accounting podcast on the implementation of the JobMaker Hiring Credits Scheme in Australia. This episode focuses on the eligibility criteria for employees, and eligible wages. If you wish to read the content of this podcast, you can read our JobMaker blog article on our website, evolutionclouds.com.au.
Eligible employees. Eligible employees must meet the following criteria. Have received, for at least 28 consecutive days, within 84 days before commencing the new employment, one of the following income support subsidies: parenting payments, youth allowance, job seeker allowance. Please note that employees can include eligible days where the income support payment was nil. Have started employment between 7 October 2020 and 6 October 2021 inclusive. Are not receiving JobMaker or JobKeeper payment subsidies from another employer. Are hired as employees, full-time, part-time or casuals, not subcontractors. Are working an average of at least 20 hours for each whole week of employment for the employer applying for the JobMaker hiring credits. This includes paid leave and public holidays.
Non-eligible employees. The following employees are not eligible for the JobMaker hiring credits. Employees previously employed as subcontractors by the applying entity between 7 April 2020 and 6 October 2020. Relatives of the sole trader. Partners in a partnership or close associates to one of the partners. Trustees or beneficiaries of the trust, or close associates to one of the trustees. Shareholders or a director of the company or close associates to the director or one of the shareholders. Please refer to our blog article for the correct definition of the term close associate.
Wages and salaries assessment. When accessing the payroll expense for their business, employers should include amounts paid in the relevant pay cycles by way of salaries and wages, overtime, shift and penalty rates, paid leave, paid absence on public holidays, commissions and bonuses, allowances, JobKeeper top-up payments, tax withheld, super salary sacrifice, other effective salary sacrifice arrangements.
The following amounts should not be included in the payroll expense assessment: government-paid parental leave, lump sum payments and employment termination payments, employer superannuation contributions, directors' fees, fringe benefits provided to an employee, unless part of an effective salary sacrifice arrangement. Reimbursements of expenses incurred by employees. Thank you for listening to the second episode of our JobMaker Hiring Credits podcast. Additional episodes are available on our podcast channels, on Apple Podcast, YouTube or Spotify. We hope you enjoyed listening to this episode. To listen to more podcasts from Evolution Cloud Accounting, please subscribe to one of our podcast channels to be notified when we post new topics.